What if I told you that the silver market is sitting on a ticking time bomb right now, and most people have absolutely no idea? We're not talking about normal price moves, we're talking about a potential delivery crisis, where the people who bought silver on paper may not actually be able to get the physical metal. Today, I'm going to break down exactly what's happening inside the COMEX silver market, why registered silver stocks are at historic lows, how the US-Iran war is pouring fuel on this fire, and what this all means for your money, whether you've never bought a single ounce of silver in your life, or you've been stacking for years. This video is going to change how you see this market. Stay until the end, because what I'm going to show you about the inventory numbers is genuinely alarming. Before we dive in, nothing in this video is personal financial advice. I'm here to break down what's happening, what analysts are saying, and what tools you have available. Always do your own research and speak with a qualified advisor before making any investment decisions. Before we dive into the COMEX data, I have a serious question for you. With all this volatility, where do you see silver actually ending this year? Are we heading back above $100 or crashing back down to $50? Drop a 100 or a 50 in the comments below. I'm going to be reading through these later to see what the consensus is. All right, let's get into the numbers. Let's start with the basics, so we're all on the same page. Silver closed this Friday, March 27th, 2026, at $69.77 per ounce. That's up nearly 3% in a single day. And while that sounds like good news, the real story isn't in today's price. The real story is in what's happening underneath the market. See this chart? Silver has been absolutely wild lately. We've seen it drop toward the $60 range, then bounce back sharply, and earlier this year, it hit all-time highs above $100 per ounce. So, what's driving this chaos? Three things. Number one, a physical silver shortage unlike anything we've seen in decades. Number two, record industrial demand that supply simply cannot keep up with. Number three, a geopolitical wildfire in the Middle East that's making everything more unpredictable. Let's break each one down, starting with the one that should scare every paper silver holder the most. The COMEX inventory crisis. And trust me, the number I'm about to show you is going to shock you. Okay, so first, what is COMEX? COMEX, the commodity exchange, is basically the world's largest marketplace for silver futures. It's where traders buy and sell contracts for silver delivery. Think of it as the central hub of global silver trading. Now, inside COMEX there are two types of silver inventory. Eligible silver. This is silver stored in COMEX-approved vaults, but it belongs to private owners. It's not available for delivery unless the owner offers it. Registered silver. This is the critical one. This is the silver that is actually available to be delivered to anyone who holds a futures contract and demands physical metal. And here's where it gets scary. As of March 26, 2026, registered silver has fallen to just 77.17 million ounces. To put that in perspective, registered stocks are down 75% from their 2020 peaks. That's not a small dip. That's a collapse. Now here's what makes this even more alarming. During the March 2026 delivery cycle, traders filed notices for 10,526 contracts. That's 52.6 million ounces of silver they wanted delivered, against a registered inventory of roughly 86 million ounces at the time. That means, in one delivery month alone, traders were asking for more than half of all available silver on COMEX. And here's the kicker that not enough people are talking about. On any given day, the amount of paper silver trading, meaning digital contracts, dwarfs the physical. We're talking 261 million ounces of paper contracts traded versus minimal physical deliveries. That is a paper-to-physical ratio of potentially hundreds to one. Now I want to be clear. A default hasn't happened yet. Nobody's ringing the alarm bells officially. But the math here is brutal. If large players keep demanding physical delivery at this rate, registered stocks could be depleted faster than new silver can replace them. And what happens then? That's the question every silver investor should be asking right now. Now, I know what you might be thinking. Okay, so there's a shortage. Big deal. Will this actually affect the price? The answer is yes, but not in the way most people expect. And I'm going to show you exactly how this connects to what's happening with Iran, AI, and electric vehicles in just a moment. But first, let me explain why this drain is happening, because the reason is bigger than most people realize. Why is silver disappearing? The demand story. Here's the thing about silver that makes it completely different from gold. Gold is mostly a financial metal. About 90% of gold demand is jewelry and investment. Silver is an industrial workhorse. Nearly 50 to 60% of all silver demand comes from industry. And the industries consuming silver right now are the fastest growing sectors in the entire global economy. Let me walk you through the big ones. First, solar energy. Every single solar panel uses silver. As the world races to build more renewable energy, silver consumption in solar has been absolutely enormous. We're talking nearly 200 million ounces in solar panels alone this year. Second, electric vehicles. EVs use significantly more silver than traditional gasoline cars. In the electronics, the battery management systems, the charging connectors, as EV adoption accelerates globally, silver demand accelerates with it. Third, artificial intelligence and data centers. This is the one that most people completely overlook. Global IT power capacity has grown over 5,000% since the year 2000. AI data centers are doubling their power requirements every few years. And silver is in every server, every interconnect, every power management system inside these facilities. AI infrastructure is a national security priority right now. That means this demand is price insensitive. Companies and governments will pay whatever it costs to keep building. Fourth, 5G and telecommunications. Every 5G base station, every antenna, every high-performance network router loaded with silver. This is a multi-year build-out happening across dozens of countries simultaneously. Fifth, defense electronics. And with the current US-Iran war situation, which we're going to talk about in a moment, defense spending has surged. Silver in sensors, guidance systems, and advanced military electronics is seeing genuine counter-cyclical demand. The result of all this? The silver market is running its sixth consecutive annual deficit. That means every single year for 6 years in a row, the world has been consuming more silver than mines are producing. In 2025, that deficit was around 67 million ounces, and 2026 is expected to be similar. Where does that missing silver come from? Above ground stockpiles, which brings us right back to those COMEX registered inventories draining day by day. So we've got a physical shortage, we've got record industrial demand, and now let me add the third ingredient to this fire. Because the US-Iran war is doing something very specific to this market that most analysts are getting completely wrong. Here's the part that might genuinely surprise you. Since early 2026, the United States and Israel have been conducting military operations targeting Iranian infrastructure. The Strait of Hormuz, which is the choke point through which roughly 20% of the world's oil passes, has been under serious threat. This has done two things to the silver market. The first effect, safe haven demand. Whenever there's geopolitical chaos, investors run towards safety. Gold and silver both benefit from this. That's actually what we saw on Friday. Silver jumping nearly 3% in one day as investors looked for shelter from the storm. Earlier this year, this safe haven panic actually pushed silver above $121 per ounce, an all-time record. The second effect, and this one cuts the other way. Industrial demand pressure. War drives up oil prices. Higher oil prices raise energy costs for manufacturers. Higher manufacturing costs slow down production of, you guessed it, solar panels, EVs, electronics, and data centers. the very industries that consume the most silver. So in the short term, war is actually a headwind for silver's industrial demand, even while it's a tailwind for investment demand. This is why silver has been so volatile. It's getting pulled in two directions at once. Safe haven buyers pushing it up, industrial slowdown fears pushing it down. And the result is the wild price swings we've been seeing, from $60 to $70 to above $100 and back again. But here's the longer-term twist. If the conflict continues to damage oil infrastructure, if the world doubles down on energy independence because of this war, that actually accelerates the build-out of renewables, EVs, and energy storage, which is massively silver-intensive. So paradoxically, a prolonged US-Iran conflict could end up being one of the most bullish catalysts for silver demand we've ever seen, just on a 12 to 24-month delay. And what about gold versus silver? Gold is up significantly this year. It closed Friday near $4,490 per ounce. Silver closed at $69.20. That gives us a gold to silver ratio of about 64 to 1. Historically, that ratio averages somewhere between 60 and 80 to 1. So silver is not dramatically undervalued versus gold right now, but it is trading well below its January highs, which means the compression we saw when silver outperformed gold massively in 2025 has partially reversed. Many analysts believe that when this market resolves, when the macro headwinds from the war ease up, silver will outperform gold again, just as it did in 2025. All right, so we've covered the inventory crisis, the demand drivers, and the war effect. Now I want to give you the complete picture. The forecast numbers, what the experts are saying for the rest of 2026, and most importantly, what should you actually do with this information? This last section is where it all comes together. Don't click away. 2026 forecasts and what this means for you. The Silver Institute, which is the most authoritative body tracking global silver supply and demand, released their 2026 outlook in February of this year. Here are the headline numbers. Total global silver demand in 2026, expected to remain roughly flat at around 1.16 billion ounces. Industrial fabrication, down about 2% to around 650 million ounces, a 4-year low. The drag is mainly from solar panel manufacturers finding ways to use slightly less silver per panel. But the tech sectors we talked about earlier are picking up the slack. Physical investment, bars and coins, up 20% to approximately 227 million ounces. That's a 3-year high. Retail investors and stackers are coming back in a big way after 3 years of relative quiet. Jewelry and silverware down significantly, mainly because of price sensitivity in markets like India, where higher prices reduce consumer buying. Total global silver supply expected to rise about 1.5% to around 1.05 billion ounces, a decade high. Mine production is growing, but not fast enough. The net result, a 6th consecutive annual deficit of approximately 67 million ounces. Let me put that in plain English. The world will consume roughly 67 million more ounces of silver than it produces in 2026. That gap has to be filled from somewhere, and right now it's being filled from the same vaults that COMEX is drawing from. This is why the registered inventory drain is not just a technical footnote. It's a real-world reflection of a genuine structural imbalance in the global silver market. What does this mean for you? Now look, I'm not here to tell you what to do with your money. That's your decision and yours alone. But here's what the data is telling us. If you're completely new to silver, understand that silver has 2 roles. It's a commodity that industry needs, and it's a financial hedge that investors want. That dual nature creates both opportunity and volatility. If you're considering physical silver, the COMEX registered inventory situation is a reminder that paper promises and physical metal are not the same thing. The people who hold the actual metal in their hand are not exposed to a delivery crisis. If you're watching this market, the key numbers to track are COMEX registered inventory levels, the gold to silver ratio, and any diplomatic developments in the Middle East that could ease or escalate the industrial demand pressure. The bull case for silver is intact. Structural deficit for the 6th year running. Physical investment demand surging. Tech and AI demand growing despite the war. COMEX inventories at multi-decade lows. The risk factors are real. Continued USD strength and rising yields are headwinds. Industrial demand could soften further if the war extends. Price volatility will likely remain extreme. Markets are closed for the weekend right now. Monday's open will be driven by whatever happens diplomatically or militarily over the next 48 hours. Stay alert. Here's the bottom line. The silver market is not broken, but it is under stress, unlike anything we've seen in decades. The combination of a physical delivery squeeze on COMEX, a 6-year running supply deficit, record industrial demand from the technologies of the future, and a geopolitical wildcard in the form of the US-Iran war. This is not a normal market environment. And the people paying attention right now are going to be very glad they were. If you found this breakdown valuable, hit that like button right now. It genuinely helps this channel reach people who need to hear this. Subscribe if you're not already. We cover these COMEX developments every single week with the actual numbers, not just the headlines. And drop a comment below. Are you holding physical silver? Are you watching this from the sidelines? Or are you just starting to research this space? I read every comment. The next video coming up covers exactly how COMEX delivery mechanics work, step by step, so you understand how a potential squeeze would actually unfold. You do not want to miss that one. Stay stacked. Stay informed. I'll see you in the next one.